Good morning, everybody. I wanted to share a quick update on the recent market volatility following the U.S. and Israeli strike on Iran over the weekend. Anytime we see headlines like this, it's normal to wonder what it means for the markets and, more importantly, for your financial plan. Right now, markets are focused really on one key question, and that is this the start of a prolonged, drawn out conflict? Or is it going to be short lived, a targeted response intended to de escalate the situation? Um, this matters because a brief, contained event typically leads to volatility that fades relatively quickly. A wider, more sustained conflict, especially one that disrupts energy supply or shipping lanes, would require markets to adjust for a more lasting shift in risk. Now, the good news right now, all signs suggest that the US is not pursuing a long term regime change type campaign. I have a feeling that would be rather unpopular here in the United States. And don't forget that midterm elections are coming up later this year. Um, so, overall, that's a constructive signal for global markets. Now, from our perspective, historically, geopolitical shocks tend to follow a fairly familiar pattern. There's an initial risk off reaction, which we are going through right now. Um, Days or weeks later, markets tend to stabilize and they typically recover unless core economic infrastructure winds up being damaged. Overall, geopolitical conflicts, market shocks in general, it's exactly why your portfolio is built the way that it is. We're balancing quality growth with risk management. Everything's designed to weather moments like this without needing major adjustments on the fly. What our investment team is watching right now. So, we're monitoring several key indicators right now, including developments around shipping routes and energy infrastructure, particularly the Strait of Hormuz, which remains open. OPEC Plus decisions, including the recently accelerated production increase, the scale of any retaliatory actions, many of which did take place over the weekend, movement in credit markets where investment grade spreads have widened a bit, market volatility levels, which are elevated but not at extreme levels. Um, at the end of the day, all of this helps ensure we aren't reacting emotionally. We're responding thoughtfully based on actual market data. Now, some reassuring evidence from market history. To wrap up here, it's important to remember historically the S&P 500 has shown an average day of decline of around 1.7% during geopolitical events such as the one we're going through right now. And 65% of the time, markets were higher 1 year later. That historical resilience is a big reason why we stay disciplined and long term focused. Now, included in this message below is a breakdown of past market shocks, many of which involved geopolitical conflicts and their impact on markets over short and longer term timeframes. I feel like that would be helpful to share with you. You can click on it and download the PDF that's available. Now, in closing, if you're feeling uneasy or have questions about how this all affects your personal financial plan, please do not hesitate to reach out. But the advice here is to find comfort in historical precedent. Geopolitical shocks like this tend to create major news headlines in the short term, but work themselves out within financial markets faster than what most think. Now, we're here to help you navigate moments like this. Our teams will be monitoring the situation going forward. So that's it for now. We'll be in touch if needed. Have a great day.